All right. Hey, welcome everyone. You're at another episode of our weekly market outlook here at ARM Capital. Going into the new year 2019, coming off of Christmas. Hope everyone had a good holiday season. We sure did. And as we mentioned before, we haven't been taking any positions this week, and it's been pretty ugly. So going into the new year, we want to have a nice strong plan ahead, and we're taking a little bit to kind of formulate, what's happening in the markets right now. It's pretty wild. So jumping right in, it's actually a pretty bullish week. You can call it the Santa Claus rally if you want, but almost all the indexes across the board ended up, just net positive for the week. The Dow Jones up, 0.69%, SPY 0.23, and the QQQ up 0.5%. Still all negative year to date, and we had some wild sessions in there, especially on Friday where we had some heavy losses. I think the Dow was down 600 points and ended up positive for the day. Wild activity. So we've been kind of grateful that we haven't really had any positions. It's just, a lot of risk on the table right now. But as we mentioned last week, is that we were getting pretty far overextended into these territories into the bear market. And so seeing a little bit of this rally isn't really surprising to us. We're just trying to gauge if it's founded on good facts or if it's just that, a bear rally, and it will continue down further. So you see nice strong price action coming up here, hitting down a little bit, a little 220. All these charts kind of look the same. Some of them are, closer to their, broken down support zones than others. But mostly you're all looking at the same charts. When the markets are acting this violently, a lot of these charts tend to look the same. Like barely a difference there. We're just below the 250, 248 mark. You should see some pretty good resistance there, as I believe that had some long-term resistance if I wasn't mistaken. So we might see some action. The other one we want to be watching, I think that one's, let me pull this up real quick. Yeah, we had long-term support down at about 153, so this could be a real nice hammer top right here. That we'll just go right back down now. We'll take some more short positions. The majority of what we're looking at this next coming week is on the short side. All right, our favorite indicator right here. So last week we had a spike up into the zone, and we were mentioning that we should be watching this. And you get a full nice bar. It closed at its high right there. So this is kind of surprising to us as the VIX gauge. So we closed this is on the daily chart. This closed the day at an all-time high in volatility reading, and the next day, we went up maybe 0.1 and just went straight down. Usually you see some sort of wick or a little bit of the bears punching that back down at the end of the day. So that must have happened just overnight. The sentiment just changes. So right now we're in a nice back down here. We're still bearish until we get below this 20 level, guys. So we still have a long time to go, and this may bottom out. If you can draw a VIX on it if you want. It's not as realistic as on equity charts because it's a volatility gauge and not a price gauge. But what we're just kind of looking at is monitoring this level. As long as it's above 20, we are still bearish in this market. There's still too much uncertainty for there to be long sustained, money coming to the market that's looking for capital growth over the long term. Sector recap. We had pretty nice rally this week, but over the whole month, we're still negative. Even utilities is down 3.5% still, and it's not a good market, guys. Even one week doesn't put a dent into the performance of this past month, and we've been in a bear market for now of almost 3 months now. So we're looking at ways where we can sell the rip, if you will. We didn't have any bullish sector outlooks this week or last week. This week, the only thing that we can make a case for is utilities. There might be some upside here to about 138 level. You have a bottom over here. You didn't breach that. You got a wick down, but you closed above it. Now you have some strong candles coming up, and you're above what's that? The 200-day moving average. So if you were really trying to be bullish, this would probably be the only avenue that we'd recommend at the moment. Last week's bearish sector outlooks. We got energy, material. I mean, everything just looked like crap last week. So we can. This week, we're bearish still on technology and materials. Now, now this rally, if we do, somehow close this trade deal, and every best case scenario, this rally might sustain itself for a while further. Which, in case the trades that we're attempting to make are probably going to be void. What we're looking at as our outlook is that we have some more downside to go. We don't think 2019 is going to start off as some of the other bullish years, because we're finishing almost more than 5% down on some of these indexes, which is pretty bad sentiment, especially when a lot of these other places in the world that you can invest in right now, they've been hammered for years. So there's a lot cheaper assets out there to buy, a lot more potential growth in some of these emerging markets that we see there's going to be a more and more withdrawal of capital from the U.S. markets in 2019. Now we're looking to capitalize on that, so we're looking at basically selling the rips here. And in technology, you're right above your previous support level that you broke down below, 160, like 158.80. That's not a bad level to get in on the short side. You have limited, you can put your stop loss here at 55. Take a $10 spread, go back right down to 150. If you think this market is going to continue to go down, these are the kind of things that we're looking at. Same thing with materials over here, and that has been a crap sector for the last couple of months now, and so let's play on that. And you're coming right above that 85 level, below all of its moving averages. So let's pin it against the 20 and let's bring it back down. You could probably get in, try to maybe see if it pumps up to 84. If it doesn't, you could probably still take 83 to 80. 85 is your loss. Still 3 to 2. It's not bad. We're starting to enter in some of our crypto overviews into our sessions now to give you guys a little bit of exposure to those markets. We have been out of crypto since when was it? May, I want to say. Like when it broke below 10K is when we kind of sold the rest of our position. We made decent money on it, but there was just there's too many fundamentals that we believe in for us to be on the short side of it. So we see it now coming down to a reasonable level where there will probably be a lot of accumulation action happening before the next pump up, and so we're starting to look into deploying a little bit of our assets into this market when prices are cheap and they've been hammered down and people are getting out of the market. So it went up from 19,000 in January, and it's been steadily going down. It was holding 5,600 level for a couple months, which was, you can see even July through November, they were holding that, was that 6,000 level? Yeah, 6,000 level. And then you just get some nasty price action and it just breaks this. So we think this is, it might not be the end of the capitulation phase, but it's definitely the starting phase of it. You read any reports about mining profitability, and most of them are up at like $5,000. So if you're staying down here at 3,800 for too long, then more and more miners are going to get out of the market. The difficulty in the network hash rates are going to go down, which are going to make it more profitable for miners who are still in the market or have low electricity costs. So we'll find an equilibrium at some point, but we definitely see a lot of versatility in cryptocurrencies and applications in the future. So we like to keep an open mind to new assets, but we do like to fully vet them first. So we will only be reviewing Bitcoin. We might be adding in a few others in the future, but if you want to get more exposure to cryptocurrencies, there are other services that can help you. We just want to give you a broad overview of the general direction and our sentiment on it, and how it's progressing in the future. So stay tuned. We have stock alerts, equity analysis coming up in our next video that should be up on Sunday. And we'll get prepared for this new year, and we'll be positive alpha once again. All right, take care, guys. Talk to you later.